3 in the morning. You're browsing real estate websites, and every house that isn't falling apart costs $500,000. Old countertops, stained carpet, and the realtor calling it an unmissable opportunity. You're doing mental math with your salary, wondering, did I miss a promotion or has the market gone crazy? The answer is simple. The math is brutal, and today we're going to prove it with real numbers. We're going to calculate exactly who can buy a $500,000 house in 2026. Not who gets bank approval, but who actually pays without becoming a slave to the bills. The difference between these two is gigantic. In dozens of American states, $500,000 is the starting price. That gets you 1,200 square feet, 3 bedrooms, 2 bathrooms in Denver, Austin, or near any major metro area. This is considered a starter home. The median household income in the US is $84,000 annually. We're asking people earning $84K to buy $500K houses. That's 6 times annual income. A ratio that a generation ago would be considered insanity. But realtors say you can do it. The bank approves, your parents bought with less. So what's the problem? The problem is they're lying about what affordable really means. Let's start with the down payment. 20% of $500,000 is $100,000. The median American savings account has $8,000. You're $92,000 behind. If you save 10% of your gross income of $84K, that's $8,400 per year. It'll take 12 years to save $100,000, assuming zero inflation in prices. Impossible, right? So you opt for 10% down, $50,000. Congratulations. Now, you pay PMI, private mortgage insurance, between 0.5% and 1% of the loan annually, meaning $187 to $375 extra dollars monthly. $50,000 down leaves you with a loan of $450,000. With an interest rate of 6.5%, your monthly payment of principal and interest will be exactly $2,844. But that's just the beginning of the real costs. Property tax. The national average is 1.1% of the home's value annually. On a $500K house, that's $5,500 per year or $458 monthly. In states like Texas or New Jersey, it can reach 2% or more. Homeowners insurance, with climate change, costs have exploded. The national average is $1,500 to $2,500 annually, depending on the state. Let's use $2,000 annually or $167 monthly. Home maintenance. The rule is 1% of the value annually. On $500K, that's $5,000 per year or $417 monthly you should save. Roof, HVAC, plumbing, everything breaks eventually. PMI $280 monthly on average for this scenario. HOA Homeowners Association. If your house has one, add $200 to $400 monthly. Let's add everything up now with mathematical precision. Base mortgage payment, $2,844. Property tax, $458. Homeowners insurance, $167. Maintenance reserve, $417. PMI, $280. HOA, $250 conservative average. Real monthly total, $4,416. Financial advisors recommend spending a maximum of 28% of gross income on housing. With a cost of $4,416 monthly, you need to earn $15,771 per month. That's $189,257 annually just to follow the 28% rule. Banks approve up to 43% debt to income ratio. Using that risky limit, you still need $10,269 monthly. That's $123,233 annually at minimum. And that's the dangerous limit, not the comfortable one. Only 18% of American families earn $150,000 or more annually. About 10% earn above $189,000. This means 90% of families cannot comfortably afford a $500K house, but people are buying. So how does it work? Let's look at a real family. The Andersons, 2 professionals, $160,000 annually combined, well above median, solid upper middle class, gross income, $160,000 annually. After federal taxes, 22%, state taxes, 5%, FICA 7.65%, and $401,000 5%, approximately $98,000 remains net. That's $8,167 monthly in the checking account. Housing cost, $4,416 monthly. Leaves $3,751 for everything else in life. To financed cars, $700. Car insurance, $280. Gas, $320. Student loans, $550. Health insurance employee portion, $450. Groceries for family, $900. Utilities, electricity, water, gas, internet, cell phones, $480. Total spent so far, $3,680. Leaves, $71 monthly. $71 for clothes, entertainment, medical emergencies, car repairs, children's activities, restaurants, gifts, any unexpected expense.
Have you ever stopped to think that the videos you just watched with flawless scripts and engaging narrations might have been created by someone who never even touched a camera or a microphone? There is a new digital elite profiting heavily behind the scenes of YouTube and social media, building massive channels without ever showing their faces or spending thousands of dollars on equipment. While most people are frozen by the fear of being on camera, these individuals are using the hidden power of artificial intelligence to generate automated content that works and earns for them 24 hours a day. The secret to dominating this game isn't about having a famous face. It's about knowing how to command the right tools to create scripts, voices, and visuals that magnetically hold the audience's attention. I've gained access to a strategic method that reveals the exact roadmap for you to build your own invisible digital empire. Mastering AI to turn clicks into a real source of income. It is the perfect opportunity for those seeking financial and geographical freedom without having to deal with the pressure of being a public figure on the internet. Best of all, you can seize this opportunity right now for a symbolic price. The complete training is under an exclusive promotion, dropping from $97 to just $17. This is your passport to unlocking the knowledge you need to start your professional journey with AI today. Click the first link in the description to secure your spot while this discount is still active.
This family is spending 54% of net income on housing. Any extra expense becomes a crisis. AC breaks, that's $4,500. Car breaks, $850. Kids braces, $5,000 financed. In the fourth month, the car needs new tires, $680 on the credit card. Seventh month, roof leak, $2,800 financed. Ninth month, work hours reduced, short, $500 monthly. The emergency fund was never built because nothing was left over. This is the reality of being house poor. You technically own a house, but can't afford to live in it comfortably. Every decision goes through the filter. Can we still pay the mortgage? With median income of $84,000 trying to buy a $500K house. Mathematically impossible. Even using 43% DTI housing would need to cost $3,010 monthly. Real cost is $4,416. Short $1,406 every month. Where to find $1,406 extra monthly? Doesn't exist. You'd need extra work earning $21,000 annually after taxes. That's basically a second full-time job. And for what? Just to survive in the house. Let's talk about hidden costs. Nobody mentions closing costs are 2 to 5% of value. On 501k, that's $10,000 to $25,000. Moving $2,000 to $5,000. Basic furniture and decor, $10,000 to $15,000. Before living 1 month, you spent $22,000 to $45,000 extra. Immediate depreciation, you lose 6% in commissions if you sell quickly. That's $30,000 vanishing. Need to sell in less than 5 years. You'll probably lose money between closing, necessary improvements, and commissions. Effective interest rate on a 30-year mortgage at 6.5%. You pay $656,000 in interest. Total cost of the 500K house, $1,106,000, more than double the purchase price. In the first years, 80% of payment is interest, not principal. Of $2,844 monthly, only $413 goes to real equity. You're paying $2,431 in pure interest every month in the early years. Compare with rent. An equivalent apartment costs $2,400 monthly in the same area. You save $2,016 per month, $4,416 minus $2,400. In 5 years, that's $120,960 saved, plus investment returns, potentially $145,000. The market tells us rent is throwing money away, but paying $2,431 monthly just in interest is also throwing it away with the bonus of total risk on your shoulders and zero flexibility. Recession scenario. You lose your job, have 3 months of mortgage saved, That's $13,248. Find a new job in 5 months. Lost the house, renting, you can move to something cheaper immediately. The industry profits from your purchase. Bank earns 656K in interest over 30 years. Real estate agent makes 15 to 30,000 in commissions. Insurance company profits annually. Nobody profits from saying, wait, this doesn't make sense for you. The system was designed to put you in a house, not to ensure you thrive in it. Approval doesn't mean affordability. 43% DTI isn't security, it's survival limit. Prices rose 400% since 1990. Incomes rose 180%. The gap grows exponentially. In 1990, median home cost 2.9x median income. Today it costs 5.8x, mathematically unsustainable. So what's the real income needed? For true comfort, limit housing to 25% of net income. With costs of $4,416 monthly, you need $17,664 net monthly. That's approximately $265,000 gross annually. Less than 5% of American families reach that level. The 501k starter home is affordable only for the top 5%. For 95%, it's extreme financial risk or total impossibility. If your income's less than $140,000 combined, stop now. You're about to make a decision that will negatively dominate the next decade. Bank approval doesn't matter. Real alternatives. 350k house reduces payment to $3,100 monthly total. More manageable. Rent and invest. The difference can build more wealth. Wait for market correction or significant salary growth. True wealth is an equity you can't access while trapped by the mortgage. It's having financial margin, sleeping peacefully, investing consistently. It's freedom, not debt with inaccessible equity. You're not failing if you don't buy. The system is failing you. Normalization of house poverty isn't maturity. It's symptom of broken market. 43% DTI would be considered insane 30 years ago. Do the honest numbers, add everything up, see what really remains. If the answer is almost nothing or negative, you have your answer. Math doesn't lie, even when everyone around you lies. 501k house isn't a starter home. It's a luxury item for high income. Recognizing this isn't giving up the dream, it's being smart. Better to rent happy than own miserable. In 5 years, your income could double, market could correct, you could move to cheaper area. But today, with today's numbers, for 80% of people, this house is financial trap disguised as American dream. Stop looking at what you qualify for. Look at what you pay without turning life into constant anxiety. Find the number where you pay mortgage, maintain house, save, invest, and still live. For most, that number doesn't come close to 501k, and that's perfectly fine. You're not less successful being realistic. You're doing math that apparently nobody else wants to do. The market will keep lying, banks approving, agents pushing. You don't need to participate in the collective madness. Sometimes the smartest move is recognizing the rigged game and not playing. So, what did you think of this brutal math? Comment your honest opinion about this impossible market. Subscribe for more financial truths without illusions, and hit that. Like, if you're rethinking that giant mortgage now,